Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to today's Top Stock Pick segment. I am Jeremy Mullen, and Brian Hayes will be following me with his pick. But first, we will be getting into AppLovin, ticker symbol APP. The stock is a Zacks #1 strong buy, and it's a company that specializes in mobile advertising, app monetization, and app discovery. Now, AppLovin helps companies show ads and their mobile games and apps. And they make it easier for those ads to appear, and they help game makers and app developers earn money by showing those ads. Now, their moneymaker is their platform that allows advertisers to buy those advertising slots in those mobile apps. So more recently, the stock has drawn interest from AI investors because of the AI-powered software platform Axon, which has increased ad spend for their advertisers. However, many are worried that the company will be unable to maintain their 20% software platform revenue growth. This has created volatility in the name. So the stock has recently had earnings, and the price action has turned positive after initially being negative. So I wanted to dig into this name and see where the stock might be headed. Okay, let's look at the profile page here. And as you can see that lovely Zacks rank #1, a strong buy right there. We like to look at the style scores and see where they have their strengths and their weaknesses. So growth and momentum, no problem, A's. And we have a D score in value, okay? So that gives us a VGM score of B. So looking at that value, I always like to look at the PE. It's actually not that high. 22 is not bad for a tech company. It has been higher in the past, but this growth is really chipping away into that PE. And that's why the stock has done pretty well. Some other things to note: $25 billion market cap and no dividend. And look at this beta. It's pretty high, 1.86. So this is moving almost twice as much as the market is on a daily basis. Now, some background on this company. It was founded in 2011. It's headquartered in Palo Alto, California, and employs over 1,700. What else we got? We have the earnings beat. Let's look at that. So I like to look at this chart. This is the price and EPS surprise. You can see back here when the IPO, they had a nice performance, but they kept on missing. So the expectation here was the company's going to keep growing, and they kept disappointing. Had a nice quarter here, but as tech sold off, it made a low of $10. However, we started to come back, right? We had a nice quarter here, and by 2024, the stock had kind of based around the $40 level. Then it posted a really nice quarter, 40% EPS beat, and the stock essentially doubled. So after this quarter here kind of went sideways, we pulled back with the rest of the market recently. Then we posted this 15% EPS beat. So nice quarter here. Looking further in that quarter, we had a guide that was pretty good. The company provided Q3 guidance with revenue expected between $1.12 billion and $1.14 billion. This exceeded the $1.09 billion estimate. So looking at the adjusted EBITDA, that was pretty nice too, 630 to 650 million, and they had a margin of 57%. So what we want to look at next is what the analysts are saying about the company. So let's go to the estimates page. We have the agreements here, and we can see that looking at all the analysts, what they're doing, short term, all higher, and then longer term, even more analysts are taking numbers up higher. Nobody's taking numbers down lower, so it's very positive. Looking at the magnitude, which is what we really like to look at to see how aggressively the numbers are be taken higher, we're looking 75 cents to 89 cents for the current quarter. These are big numbers here, and even longer term, they're coinciding with that magnitude for next quarter. So pretty good numbers here. And usually when these analysts are taking their numbers up, they are also taking their price targets higher. So Oppenheimer reiterated their outperform and moved their price target from 97 to 105. Jefferies maintained their 105 target, so the same thing as Oppenheimer there. Wedbush had its price target at 100. They dropped it to 90, so you can see there's a little uncertainty about what this stock is worth. And I think the consensus is that this company is undervalued on their core gaming ads, but a lot of these analysts see significant multiple expansion potential via e-commerce. So that's going to be something to look at in the next couple of quarters. And with this stock trading around $75, $80, these $100 price targets are pretty nice. And if we can get there by the end of the year, that's a pretty good return for if you buy right here going into the the end of the year. So Let's look at the chart, see how we can get there. I have a nice setup here, and it's pretty simple stuff. Usually I do 2 or 3 charts, but I just have the one. We had the recent down move, and I want you guys to focus. This was the move from that nasty sell-off that we had. We tested the 200-day moving average, did bounce back, but not fully. And then we had the earnings. This green bar is earnings. The stock actually initially traded all the way down to 58 again, and then bounced back. And now it's finding some resistance at this green line, which is a 21-day moving average. Blue line is a 50-day moving average. So what we have here is simply a retracement from these lows to highs in this 61.8 to halfway back buy zone. And this lines up perfectly with the 200-day moving average. I love these setups. And as you can see, even if you missed it, you might be able to get some sideways movement before it goes in between the 65 and 75 area. Over 80, if you're short this stock, you're pretty nervous and you want to cover. The bulls are going to start pressing. And I think we can get up to this $100 area. As long as the overall market cooperates, this price action looks really great. And that's why I like AppLovin. Both those fundamentals and technicals are looking pretty good. And I think we can get there. I think we can get up, which is about a 20% move higher from current levels. So, all right, that's it for me and AppLovin. Here is Brian Hayes with his pick.
Thanks, Jeremy. Brian Hayes here with Zacks Investment Research, bringing you our other top stock pick. I have another exciting pick for you, so let's jump right in. I want to start off this segment by talking about the recent market rotation. Over the past month or so, we've begun to see selling pressure in the technology sector, including many of the big tech names like Google parent Alphabet, Apple, and Amazon. Other sectors that had lagged during the majority of this new bull market have now returned to prominence. This rotation is best illustrated using a 1-month sector performance table, as we can see here. Real estate and utilities are the top performing sectors over this time frame, while technology is lagging. So we may be seeing the beginnings of an important shift. And as the rally broadens out, we should expect other pockets of the market to play catch-up as interest rates are set to decline. With this underlying premise, my top pick this week is a Zacks ranked number 2 buy stock that generates, transmits, and distributes electricity here in the United States. This utility company serves approximately 6 million customers in states like Ohio, Pennsylvania, West Virginia, Maryland, New Jersey, and New York. They also own coal-fired, nuclear, hydroelectric, wind and solar power generating facilities. I'm referring to First Energy, ticker symbol FE. The utility's efforts to expand its regulated generation mix has provided stability to its earnings trajectory. In the last few years, the company witnessed the successful broadening of regulated operations and a complete transition to become a fully regulated utility company. First Energy is gaining from improving economic conditions and rising demand from commercial and industrial groups compared with last year. First Energy filed settlement back in April of this year of its new 4-year Grid Modernization 2 program with the Ohio Commission. With a 4-year investment of $421 million, the company aims to expand the deployment of grid modernization technologies and help reduce the frequency of power outages. The investment also includes the deployment of 1.4 million smart meters to further deliver safe, reliable power and promote modern experiences for customers. So that's a bit about First Energy's background and services offering. Let's take a bit of a more in-depth look at some fundamentals for this company. Digging a bit deeper, the Akron, Ohio-based company is part of the Zacks Utility Electric Power Industry Group, which is currently ranked in the top 35% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform over the next 3 to 6 months. As we can see, this industry has really started to outperform over the past month, with a nearly 8% gain, while the general market is negative. Quantitative research studies suggest about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. By targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And we can also see that stocks in this group are relatively undervalued based on the forward price to earnings ratio. This serves as another confirmation signal that this group is a great place to be. And moving to our snapshot page, we can see that First Energy is a Zacks ranked number 2 buy stock. The company has beaten earnings estimates in each of the last 5 quarters, and the stock price is reflecting this bullish theme. First Energy has delivered a trailing 4-quarter average earnings surprise of 2.66%. This is exactly what we want to see, as it gives investors confidence that the bullish run can be sustained. The stock has begun to display strong momentum, hitting a series of 52-week highs this year. Only stocks that are in very powerful uptrends are able to make this type of move and witness such massive outperformance. Looking at the current fiscal year, analysts covering the company are mainly in agreement in terms of earnings estimate revisions. Third quarter EPS estimates have increased by 4.71% in the past 60 days. The Zacks consensus estimate now stands at 89 cents a share, reflecting potential growth of 1.14% relative to the year-ago period. Revenues are anticipated to grow 13% to $3.94 billion during the quarter. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So First Energy, ticker symbol FE, is my top pick of the week. The company is showing strong growth metrics and should continue to benefit from a durable backing from the utilities sector. I see more upside ahead for this stock. That's it for this week. Make sure to hit that subscribe button. We bring you our top stock picks each and every week here at Zacks.com. From Jeremy and I and all of us here at Zacks, thank you for watching. Be sure to tune in next week for more of our top stock picks.